Hello, I'm Mario Toneguzzi, and I'm taking care of business. Joining me today is Anne-Marie Lurie, Chief Economist with the Calgary Real Estate Board. Thanks for joining us today, Anne-Marie.
Thanks for having me.
Let's talk real estate, and Q1 results are out today. CREB put out its data, and 9,413 MLS sales in the first quarter, up 58.44% from a year ago, a record first quarter in the market. What is driving all that demand and that frenzy? I love to use the word frenzy, frenzied activity in terms of sales in the market?
Well, there's a couple things. First of all, the sales have been almost restricted by the fact that there hasn't been a lot of listings on the market. So in the first quarter, we really did see finally a boost in the new listings in the market. So that helps support some of these stronger sales. Now, that being said, it wasn't quite enough to really do anything to the supply, but that's one of the main reasons why we actually start to see those listings improve, supporting some of the sales. But really, what's the fundamentals driving it? First of all, people wanting to get in before any further rate hikes happen, before further price gains happen. So that's really driving up a lot of the demand that we're seeing, as well as all those people who couldn't get into the market before. So we're seeing some of those people who couldn't get in the market before, some people being pulled forward, getting in ahead of those rates. And that's really what's driving these record high sales this quarter.
All right. And we looked at, you mentioned the prices, benchmark price in the first quarter, $496,767, up 15.18% year over year. Is that a record benchmark price?
It is, yeah. We finally have recovered and are growing above that now. So we're seeing some record high prices, and this is an exceptionally strong growth, not just over last year, but even over the quarterly gain was fairly significant. And this is really driven by the fact that there's not a lot of supply in the market. I often talk about that measure of months of supply. We're at 1 month of supply. For the first quarter, that's exceptionally low, and it's driving really strong price gains, especially in the detached side of the market.
Yes, so the months of supply, 1.13 months, down 52.15% from a year ago. Can you maybe explain a little bit more about what the months of supply means and what a typical quote unquote normal year would be?
Right. So what it really is just saying for all of the supply in the market, and based off the current demand, it would take 1 month to get rid of all of the supply. So that's not really a lot. When we think about what's typical, when we look over longer terms, usually in the first quarter, we kind of see that 3.5 to almost 4 months of supply in that first quarter. And that would be kind of much more of a balanced market. And I mean, it does change based off seasons, of course, but that's typically what we see. So when we're at 1 month of supply, we typically have more like 3.5. That's quite low. And we haven't seen levels this low in terms of a first quarter start since 2006. So really exceptionally tight sort of market conditions.
Yeah, and let's not forget too that last year was a record year for MLS sales for the whole year. So it's going to be an interesting rest of this year. I wanted to ask you about the underlying fundamentals driving the real estate market. Can you talk about that and all the economic indicators that are showing positivity for this market?
Well, when we think about some of the underlying factors, I mean, obviously population growth, migration, really important to housing markets. We have started to see some improvements as, the economy starts to reopen. We are seeing those migration numbers start to improve again, at least on a provincial level. So there's been a bit of a shift there. We're also seeing job numbers improve, which is another key factor for our housing markets, and we're seeing not just like we're seeing growth in higher paid industries as well, and professional and technical services. So a lot of different areas where we're starting to see employment growth, and that does start to support demand. And it's one of the reasons why we think housing demand will remain not necessarily at the record levels for the rest of the year, but will remain strong because of those fundamentals. Obviously, interest rates is another factor. even though they've come up from where we've been, they still remain exceptionally low based off historical levels. That also supports these strong levels of activity in terms of demand. So those are some of the key factors. And then of course there's the I would say not so tangible sort of factors. So higher energy prices in our market, in our city, it tends to improve confidence regarding longer term outlooks for our city. So that's another factor that really, while it might not have a direct impact, it does tend to just, create some of that confidence in what our city looks like moving forward.
Well, and you mentioned that, like, well, the strong oil prices that, although it may not have been translated yet in terms of direct job employment, it's great for the government. Government gets more money into its coffers. It can spend more money in building and infrastructure, which creates jobs, which helps the housing market, right?
Right.
It's all a
Right.
domino effect, right?
Yeah, absolutely. Mhm.
All right, super. Okay, so the rest of this year, what's the outlook look like for you in terms of both prices and sales?
Well, and I mean, I have to, like, the first quarter has been, we did expect a strong quarter starting off the year. It's been a little stronger than we anticipated, but as we move forward, I still feel that as rates continue to rise and there continues to be some inflationary pressure in the market, we should start to see that those sales levels remain strong, but not quite at the levels that we're seeing today. So I do expect that will start to taper off a bit from where we've been. And then that should help support more balanced conditions. But I just don't think that's going to happen quickly. It's going to take some time because our market is so tight. But as that happens, it should start to ease the pressure off prices. I mean, when
Yeah.
we see this type of price growth, that doesn't tend to be sustainable for extended periods of time. So I do expect to see that price growth should start to move into I would say a slower pace of growth compared to what we're seeing today as we start to get into more balanced conditions. But that, again, I think that is going to take some time, but we should start to see that play out, by the third, fourth quarter of this year.
All right, super. Thanks, Anne-Marie, for joining us today.
Thank you.
All right, that was Anne-Marie Lurie, Chief Economist with the Calgary Real Estate Board. I'm Mario Toneguzzi, taking care of business. Thanks for joining us today.